What is up, dudes and dudettes? This is Dude-Diligence here, and today let me express to you some very interesting thoughts I have on the GME stock split. Guys, you know what? You know what is wrong with stock splits? Is inherently it does not change the value of the stock at all. It's like, you know, if I have a $100 bill and decided to give you the $100 bill, if you give me $10 bill, during that exchange, is there any monetary difference between the $10 bill versus the $100 bill? The answer is nada. So I understand what's the hype with retail investors trying to bump up stock price before stock split, like what the history is telling us, but hey, we're here to stay, so we're just gonna analyze the effect of GME split, and this video is gonna be about everything you need to know about a GME split, what we think about it, and essentially some very interesting prelude to our next GME video. If this video get a lot of likes and people actually watches this, we're gonna talk about how, as Ryan, the CEO of GME, could profit from this, and his underlying, not really conspiracy, but his plan of what you do with his options, and basically how he can profit from this entire retail hype, whatever that is. All right, well, let's get into it. Alright, first things first, let's get the facts straight, okay? So on March 31st, our beloved GameStop, right, aka GME, posted their recent AK. For those of you who don't know what AK is, essentially a means of a public company issuing a form to inform its public investors and all kind of investors alike what is going on with this company. Like, for example, they would disclose urgent situations like, you know, maybe we want to change a CEO. You know, maybe someone is being really naughty at the office, we decide to fire them because of sexual harassment. Or fun stuff like stock splits, reverse splits, yada yada yada, and all these interesting business factors. Okay, so on that day when the document is basically pushed to the SEC website, the internet blew up. Oh my god, blew up is I think is the most minimal word I can use to describe this situation. Because if we go look at the chart of GME, you will realize that, you know, of course, like Google doesn't cover aftermarket and pre-market. During aftermarket yesterday, GME's stock price actually increased to $194. But this morning, some magical things happened. You know, GME decided to do a very sharp downturn. In this video, I'm going to explain to you why people speculate that a stock split would actually benefit the stock price of GME. And then why number two and I, or my friend and I, when we were in masterclass yesterday, I was so happy that I think it's actually a time to short GME whenever it's over $191. Or maybe that theory should be, you know, explained in the next video. But in this video, we're gonna give out all the facts and tell you guys the conventional knowledge, what you should deal with a stock split. And usually, you know, when a stock split happens, what are some options that you can utilize, or quote-unquote options, not really trading stock options. Like, what are some things that you should consider, whether, you know, some people will ask you, you know, whether you should sell during a split, whether you should buy more during a split, whether you should buy more before the split, or whether you should buy more after the split. There's so many schools of thoughts over here, and we're gonna unpack this in this 10-minute video, and hopefully it is gonna be a 10-minute video. So let's dive into the statement first, right? So if there's a stock split, you have to sort of try to speculate or figure out, is it a 2-2-1 split, or is it a 5-2-1 split? Is it a 1-2-2 reverse split? Is it a 4-2-1 split? So if we use our trusty, you know, notepad or whatever to demonstrate here. So first of all, you guys gotta understand that this split announcement is not final yet. So let's read it out, right? On March 31st, 2022, GameStop, aka GME, announced that it's planning to request shareholder approval at the upcoming 2022 annual meeting of shareholders for an increase in the number of basically authorized Class A common stock shares from 300 million to a billion through an amendment to companies, third amendment, yada yada yada, blah blah blah. So from this statement, we know that basically GameStop trying to do a 3.3 to 1 split. What does it mean is, in order for a company to increase its share amount from 300 million to a billion, that means beforehand, let's just do hypothetical. Let's just say GME is worth $200, okay? Let's just say beforehand GME is worth $200. And for those of you who blame me because I have an Asian brain so I can do all math in my head, because like, show me the calculator. I'll show you the calculator. So beforehand, let's just say before the split, GME was trading at $200, not $2,000, $200. And if a 3.3 to 1 split is happening as it proposed in this AK document, let's just say you have 200, the GME is trading at $200 and you have, let's just say you have 100 shares, okay? 100 shares. So your total value of your portfolio of owning this GME stock is $200 times 100 shares, right? So your total worth of this account is $20,000, right? Am I doing the math right? I'm pretty sure I'm right. Okay, let's do a punch it in the calculator. 200 times 100 equals to 20,000. Okay, so this is the total value of your portfolio, assuming you're only owning GME, right? So what's gonna happen after the split happen? So after split, right? Well, what happened is, this is some simple math here, okay? So your $200 price tag will become 200 divided by 3.3 equals to $60.6, okay? So each share of your GME will worth $60.6 now, right? But because it's split, that means beforehand you have 100 shares, and now you have 100 times 3.3 amount of shares, which gives you 300, 3.3 times 100, 330 shares, of course. And then if you do the math, your total value of your portfolio didn't really went down, because supposedly it's 3.2 to the infinity, so essentially it almost equals to $20,000. Okay, nothing really changed on the actual value of the stock. But the proposed theory is, if let me ask you guys a question, also comment down below. If a stock is worth $200 and you have another stock that's worth, let's just say $60, are you more inclined to buy the $200 stock or the $60 stock, even though their market share or the market size, or basically in terms of intrinsic value or how much both company worth, essentially they're the equal size, they generate the same amount of revenue, they generate the same amount of profit. It's just like one is $60, one is $200. Which one would you be more willing to buy, the $60 one or the $200 one? Comment down below, okay? So the idea of this is, the board of GME believes that if they decrease their per share stock price to $60, there's going to be more and more investors interested in investing in the stock. Which, technically speaking, historically speaking, we have a lot of companies that have done this, and after this we always see a historical runner-up, but to a cap, right? There's a cap for the post-split stock to reach, and then when they reach the cap, the stock is most likely to go down. And in our next video, we actually established the cap already at this stage. So as we always talk to you guys, we were saying that we always have a trading plan, which we do. When this information came out, we already figured out what its post-split cap, the peak, where the peak of the post-split stock will be, and we also figured out the actual fair value of what GME will worth. So the peak means whenever it goes over the peak, it's time to short this company. But the fair value is whenever it's reaching its fair value or traded under fair value, we are assuming that because there's so much traction to this stock that eventually it's going to exceed its fair value anyways because of the FOMO train, you should probably go long on the stock, okay? So, and again, we gotta stress this, okay? We are not financial advisors, therefore we do not give any financial advice. Everything we say on this channel is for shits and giggles. But just for the purpose of the video and everything you need to know about splits, this is basically essentially everything you know or you want to know about a split. And then most likely what's going to happen is whenever the split actually happened, let's just say it happened, it happened and it becomes $60. But in reality, what GME is right now is trading as about $160. So if we do the exact same math, you will realize that, it comes a little bit lower than that, okay? After split, it's probably gonna worth about $40, okay? And 48 point whatever, 14.48, right? But in reality, it probably in the next day probably gonna reach $50 anyways. And afterwards, what you really need to figure out is how many people would actually jump onto the wagon and start buying GME shares. But again, right, for those of you who are trying to learn something about finance, there's a thing called market cap, right? When you do a split, the market cap of the company does not change, okay? No change, nada, no change, right? None change, which means the total value of the company doesn't change at all. So what does split actually change? It's just a public sentiment of the company. So basically, it's an artificial move of the company or the board member of the company to push more retail money into the company to jack it up. But in reality, the operations, the management, the revenue, the profit, nothing changed at all. So this would induce what? Another pump and dump scheme, right? Pump and dump scheme. And essentially, who is actually going to benefit? The management that holds options that basically allow them to buy the stock much lower than the actual retail price. And also, the big players who basically trap all these back holders because they think it's going to have a dramatic effect on this company. And again, on our channel, we preach, the thing is, trading is a survival game. You should only invest in a company that you actually believe that, it will go better, or, in terms of economic trajectory, it will make profit, or, it will garner more revenue, produce more profit. And if they're financially sound, their stock price will just naturally increase. But we do not advise anyone, or we don't recommend, like, if we were you, we probably won't, place any gamble bets on this thing, right? But, if you like this kind of content, smash the like button and subscribe, or, comment down below any thoughts you have, any questions that you have. And if this video gets, significant, let's just say this video gets 30 likes and at this stage of our YouTube career, let's just say this one gets 200 views, we will post another GME video. And then the next GME video is gonna be what our proposed peak of GME will be post-split, and what our hypothesis of where GME will go after this earning news coming out, and then why our prediction of why we were so happy yesterday. Literally, I talked to my partners. I thought we will make some money of GME, and when it will probably gonna drop today. We didn't really do a recording, but if you guys don't believe me, I will let him be on camera, and some of our classmates on camera, because I literally just stirred up my entire class last night because I was really fired up, and I told them that whenever GME reaches $191, it will always go down from that point instead of going up. And today the Wall Street agree with me, and as usual, Wall Street always agree with me, and I will tell you guys why in the next video. And also in the next video, I'm gonna tell you guys what are some proposed trading plan that we might have for GME if we ever gonna go back in and sort of profit off of this retail FOMO train or whatever it is. And on Patreon, we're probably gonna post a detailed game plan of GME just in case some of you actually want to get into this trade. And you know what? Have a great weekend, and see you guys on the upside.